Hey guys, Frank Curzio here with another live daily video. Love to get your feedback on these, frankcurzioresearch.com. And I'm sending this video out because I wanted to show you how good I look. My workout gear and a haircut. My first real haircut. Yes, Florida's open. So that's all I wanted to say, and have a great weekend. I'm just kidding. So this video is titled, Start Loading Up on This Sector Now. Not necessarily it's a sector, but you're going to see exactly what I mean. I'm going to bring in a pretty cool chart here. Here we go. So this is a chart from Bank of America. It says stocks have not been this attractive versus bonds since 1940. Don't get excited. We know how expensive stocks are. What they're talking about is the S&P 500 yield, right? The whole S&P 500 against a 10-year Treasury yield. So if you see this line right here, if you could follow me, how it's the highest since 1940s. Now, this dividend and this yield is not because this spread and the gap between has never been this wide, but it's not because the S&P 500, the yield has come down. It's because the 10-year Treasury has come down tremendously. It's trading below 0.7% compared to usually over 2%. So what does that mean? It means that people, and not just mom and pop investors, I'm talking about institutions, are craving yields. The reason why the credit crisis happened is because you slapped AAA ratings, you paid off the rating agencies, and you had trillions of dollars invest in something they thought was AAA rated, which is why you can get a high yield and with little risk. And we all know what happened because you decided to leverage the hell out of it. But the trillions and trillions of dollars that went into it, that's why it accelerated that crash. The point is, right now in the bond market and Treasury, it's about $25 trillion. The yield is so low. You're looking at inflation 1.5%, maybe 2%. You're not even going to get your money back after inflation. So there's always a need for yield. And one of the best places you can find it right now is the S&P 500. That's why we're launching a new newsletter called Income Intelligence in 2 weeks. Have Genia Turanova running this newsletter, but I'm very excited about this product because the dividend stocks and dividend paying stocks are going to be the new growth stocks. You're going to see tons of money flow into these names. However, you need someone on a product like this that knows exactly what they're doing, because it's not just finding the high yields and looking at REITs and looking at MLPs. It's trying to find the highest yields and by taking a less amount of risk. And in this market, there's a lot of minefields when it comes to dividend-paying stocks. You guys know. Even dividend aristocrats are supposed to be safe. A lot of those companies suspended their dividends. You're seeing that every place. And when a company spends dividend, what happens? Usually the stock gets crushed. So this newsletter is being run by Genia Turanova. Very, very excited. Limited income, it's called. Again, we're launching that in 2 weeks. But this is a trend, guys, you have to pay attention to. Right? It's said as a sector you need to invest in, but you're looking at dividend-paying stocks. When you're looking at the 10-year this low, look at the spread on this when it comes to yield. I mean, you could look at one of the worst stocks right now is JP Morgan in terms of earnings power since interest rates are low, but yet it pays 4% yield. Will it be higher 5 years from now? Maybe a little bit. I mean, it's hard to get earnings power, but that's a 4% yield. That's pretty safe buying a company that's trading close to its book value. So you're going to need someone that knows what they're doing, because there are a lot of minefields in this, like I said earlier, but this is one of the areas of the market that you need to start investing in. Some of these stocks are trading at high valuations, but not all of them. You have to be very careful, but this is a sector that you're going to see incredible growth that's easy going to outpace the markets, at least over the next 5 to 10 years. And now's your chance to get into these yields before you see all this trillions of dollars of money flowing into these names. I'm Frank Curzio. Enjoy the long weekend. As always, I'll report back to you soon. Take care.